Hi, everybody. It's Leslie with the New Mexico Small Business Development Center, and I'm here with Peggy McDonough. I hope I said your name right.
You
wasn't
did.
Sure. Good. And I want to invite everyone to the webinar today. Peggy is going to be presenting PPP EIDL grant and employee retention tax credit and the possible tax implications for your business, which is very relevant and valuable information. Please type your questions into the Q&A. Let me give you a little background on Peggy. She has over 30 years of industry experience in manufacturing and technical support. Finance and accounting is also big in her wheelhouse, project management, global business software implementations, and she has an MBA and a certified management accountant. I hope I got any of that correct. Thank you. We also want to strongly encourage New Mexico small businesses to learn about cybersecurity risks and to make sure they are taking actions to protect their data, especially from ransomware. Please visit our website for our list of on-demand pre-recorded cybersecurity webinars. With all that, I'll turn it over to Peggy.
Thank you, Leslie. I want to thank everyone for joining this afternoon. Hopefully we'll give you a lot of good information and help you in your process here as we do our taxes, as you do your taxes, and some of the programs that are available to you to help you get some relief in these kind of tough times with COVID-19. As Leslie mentioned, my name is Peggy McDonough. I am a SCORE certified mentor. Now, SCORE and New Mexico Small Business Development Center are working in collaboration here to provide small business owners with professional training and support. And in today's webinar, this is an example of this collaboration, and we really hope you'll find your time today productively spent and useful for your business. As Leslie said, please do not use the chat function during the webinar because we're not going to be monitoring that. But you can write your questions and the slide number in the question and in the question and answer feature in Zoom. We will address any questions at the conclusion of this presentation. So another disclaimer that I want to make sure that everyone in this webinar understands, and that is that the Small Business Development Center is prohibited from giving tax or legal advice. So any tax-related questions or accounting questions and specific questions about your individual company situation can really only be answered with credible authority by your accountant or your attorney. So also please keep in mind the information that we're going to be covering today is changing rapidly and all the time. So what we're presenting today is based on our current understanding of the programs. It can and likely will change as it has been. Although we will be monitoring and updating this webinar as new information becomes available or changes, please do not rely solely on this for your financial decisions. We encourage you to consult with your lawyers, your CPAs, payroll experts, and financial advisors. So what do we want to achieve today? Well, I would like you to walk away from this webinar with a much better understanding of the tax impacts for various COVID relief programs that have been signed into law here by Congress in the last year and a half. We'll be starting with the Coronavirus Preparedness and Response Supplemental Appropriations Act, a big mouthful there, that was signed into law in March of 2020. And we'll be ending with the most recent American Rescue Plan Act, which was signed and extended by President Biden on March 30th of this year. So we'll go into a little bit of that timeline to give you an idea of how things have evolved through the last year and a half. I also want you to leave here today more knowledgeable and with guidance on what questions you need to be asking your CPA, your tax attorney, or payroll professionals in order to make the best decisions for your business. We're going to focus on 3 specific programs. We're going to focus on the Payroll Protection Program And as you know, we use a lot of acronyms around here called PPP. I think most everybody has heard this. It's been in the news a lot, and it's quite a common program that the CARES Act started out. We also are going to talk about the Economic Injury and Disaster Loan, or it's called EIDL, and also the grants that are associated with that loan. And last but not least, we're going to talk about the Employee Retention Tax Credit, sometimes called the ERTC and sometimes called the ERC. We're going to be reviewing what's the timeline and program and background on each of these programs. What are the tax implications on each of these programs? And a few of the frequently asked questions. And again, as I said, we'll be ending today's webinar by addressing any questions that you may have. So let's get started. It's been a long and eventful year and a half. It started out with the pandemic on March 6th. Congress signed into law the Coronavirus Preparedness and Response Supplemental Appropriations Act. Well, what did that do for us? Well, the act declared the COVID-19 or the coronavirus outbreak a disaster under the Small Business Act. And this opened the door for the Small Business Administration to use its lending authority to make economic injury disaster loans for small businesses that have been impacted by the pandemic. Then 3 weeks later, what happens? We get the Coronavirus Aid, Relief, and Economic Security Act, commonly called CARES, and it was signed into law. So what did the CARES Act do? It created the Payroll Protection Program, the PPP, and it provided nearly $349 billion in PPP loans. And then in early May 2020, Congress provided an additional $320 billion in funding. And the primary reason for that was that first $349 billion was gone within 2 weeks. Then you have the EIDL. It created the EIDL. The EIDL introduced the grant to pay Small Business Administration EIDL applicants an advance on their EIDL loans. This is the grant. These advances were treated as tax-free grants and did not need to be paid back. And again, the funds were exhausted in July of 2020. And last but not least, on what we're going to talk about today, the CARES Act created the Employee Retention Tax Credit. This is a gem that I want everybody to understand and be aware of, because we talk about the PPP a lot, we talk about the EIDL a lot, but a lot of people are not aware of the Employee Retention Tax Credit. So it is a fully refundable tax credit for employers equal to a percentage of what qualified wages. These wages that are qualified include your health plan expenses that are eligible for employers to pay their employees. Then came December 28th, 2020. And here we have the Consolidated Appropriations Act that was signed into law, commonly called CAA. Now embedded in that law, because there was a lot of money, was about $900 billion in COVID relief. And $300 billion was in aid for small businesses, with about $284 billion to this SBA for first and second PPP forgivable small business loans, and another $20 billion to provide EIDL grants to businesses in low-income communities. Then shortly thereafter, we had the American Response Plan Act of 2021, and that was not $1.9 trillion. Now that was voted on March 10th and President Biden signed that into law on March 11. Among other things, it again provides small businesses with assistance, including specific programs for restaurants and live venues. So it expanded and it also clarified some of the money. And last but not least of what we're going to be talking about today, there was the March 30th, 2021, and that was the extension law. So Biden extended the application deadline to make sure that everybody was able to apply for PPP. So what does that cause in the environment? What kind of environment are we living in today? Well, a lot of it is exactly what did Congress mean? There's a lot of interpretation because Congress, when it makes a law, it does it, or creates a law or creates appropriations or money and funding, they do it at a very high level. So then that trickles down. And what's the impact? Well, we've got a lot of organizations that need to read that law, translate that law, and get clarity in that law. So IRS is involved, small business administrations involved, banks need to understand the interpretation, of course, CPAs, tax attorneys, business owners. So it impacts and ripples out throughout the entire US economy. Now, the Treasury and the IRS tax law and guidance have lagged. And they are confusing, and in some instances, even contradictory. Now, they've created new forms that need to be filled out, new applications that need to be understood and signed and filled out also. There's, as I said, confusing interpretation, and it's in a constantly changing environment. It's constantly churning. So this means you're going to deal with business situations and tax implications that you've never seen before. So let's go first into PPP, which is the Payroll Protection Program. A little bit of background on it. The PPP is a loan designed to provide a direct incentive for small businesses to keep their workers on payroll. It expands over 8 or 24-week period, and there were 2 draws. The first draw was in the CARES Act, and the PPP loans can be used to help fund payroll costs. That includes benefits, and they may also be used to pay mortgage interest, rent, utilities, worker protection costs related to COVID-19, uninsured property damage costs caused by looting or vandalism, and certain supplier costs and expenses for operations. But like I said, the money was scooped up very quickly by large businesses, and the small business person kind of got left in the dust. It was because of that that the second draw with the Consolidated Appropriations Act in December was created. This act allows certain eligible borrowers that previously received a PPP loan to apply for a second draw PPP loan with the same general loan terms as their first draw. It also allowed and opened up the door for smaller businesses to apply. As of May 31st, the application submittal was ended. So now what are we in? We're in the process right now of, of loan forgiveness. So the PPP does allow for loan forgiveness, and you can apply if you have a PPP loan. You can apply for forgiveness once all your loan proceeds for which the borrower is requesting forgiveness, they have to have been used. Now the borrowers can apply for forgiveness anytime up to the maturity date of the loan. If you don't apply for forgiveness within 10 months after the last day of the loan covered period, then the PPP loan payments are no longer deferred, and you're going to have to begin paying loan payments to your PPP lender. Now, if you do want to apply, if you do have a PPP and you definitely want to apply for loan forgiveness, please work with your PPP lender. Now, the Small Business Administration does offer free counseling and training events to help you with the Paycheck Protection Program. And you can access that through this link or this website, which is www.sba.gov. There's a lot of information out there, and it answers a lot of questions that you may have. Now, the CARES Act spells out that the forgiven loan amount won't be included in your taxable income. You don't pay taxes on the money that you receive. This loan is to provide businesses, you guys, with money to keep running and continue paying your employees. And it's not and never was meant to create a tax burden for businesses receiving the funds. With the passing of the Consolidated Appropriation Act in December, there was more clarity on how those expenses covered by the PPP loan will be covered. So previous to December, anything you spent your PPP loan on was not going to be tax deductible. The act in December changed that, and now these expenses are tax deductible. Simply put, your PPP loan will not affect your tax filing process. Again, forgiven PPP loans are not taxable. Now, this is unusual because historically and forever, if you have a business loan and it is forgiven, that automatically is taxable income. It's been in the Internal Revenue Code like forever. But, however, with the Paycheck Protection Program, loans break from that code. Congress specified and the IRS clarified that forgiven PPP loans will not count as income. This applies whether your entire loan is forgiven or just a portion. So this loan is to provide businesses with the money to keep running and continue paying their employees and not to create a tax burden for businesses receiving the funds. Simply put, your PPP loan will not affect your tax filing process. So though Congress has walked back the IRS's stance on the loan and the PPP and its relation to deductible income, that doesn't necessarily mean you can leave these funds out of your conversation on your 2020 and 2021 taxes. Whether you receive PPP funding in its first iteration or later on in 2021, you still have to be very careful when it comes to taxes. And again, I reiterate, there are still, even today, a lot of unanswered questions. Now, some of these questions stem from a lot of confusion in the PPP application process. In some cases, application woes meant businesses received money that they weren't qualified for in the first place, simply because they didn't understand or misconstrued the application questions. For example, a company might have stated that it had employees when it only had independent contractors, which are not within scope. And while that might seem like a case of semantics to the layperson, that kind of difference could have major implication when it comes time to file your business taxes. It's also important to keep in mind how the funds are being used. Any money that the business owner used to pay something else that is not included in the PPP requirements will have to be reported as income and expenses in their business tax return. So it is extremely important that you have clear and concise bookkeeping. Your PPP loan contract stated that you would produce monthly government-ready financials, and you are required to have bookkeeping in place. If you don't, you could suffer penalties and fines or trouble with an audit. One of the recommendations that we have is that you separate your accounts to identify your PPP loan. For example, if you got the money and put it into your personal account, for example, instead of a business account, be sure that you take those funds and move them into a different account. And also on your general ledger and your balance sheet, make sure that you identify that as other income, PPP loan, non-taxable. The better that you can keep it isolated, the easier it's going to be if you are audited. It's also important to adjust your tax planning estimates to include any PPP expenses that were formerly non-deductible. If you received a PPP loan, the bad news is you're going to need to expect a tax audit. Now, in recent months, the SBA and the US Treasury, Mnuchin, have announced that when he, back in 2020, announced that all PPP loans in excess of 2 million will be audited. Not might be audited, but will be audited. Now, loans that are less than 2 million are subject to an audit. Much lower loans have been and will continue to be scrutinized. Because you have a PPP, there is a higher probability that the IRS will audit you. Now, the other thing I want everyone to be aware of is they have developed a hotline for anonymous callers to report possible fraud. Now, if you have a disgruntled employee or you're in a situation where somebody's not quite happy with you, they can call this hotline. It wouldn't be true, but it doesn't stop them from calling this hotline, and they can remain anonymous. So just be aware that that is out there, and be careful with your bookkeeping and your loan isolation to make sure that if that does happen, you have everything in line and you can survive an audit. So how do you ensure a smooth audit process? Well, first of all, please don't procrastinate. Begin compiling your documentation as soon as possible. Keep all your records, your receipts, your statements, your payroll records, and PPP documentation should be kept on file for 6 years after your PPP loan is fully repaid or forgiven. Make sure you make copies to send, but always retain your originals. Hire a CPA who can represent you and defend your business against IRS if necessary. Again, does my PPP count as taxable income? No. Funds from your PPP loan, whether forgiven or unforgiven, are not counted as taxable income. You will also be able to claim a deduction for expenses using your PPP funds. So no funds from your PPP loan are counted as taxable income. If my PPP loan is not forgiven in full, does that mean it counts as taxable income? As with other business loans, funds from your PPP loan that are not forgiven do not count as taxable income. It's another question. Can I write off payroll and other business expenses if I use a PPP loan to pay for them? If you received a PPP loan and your loan was forgiven, you can write off payroll and other expenses that were paid for with these funds. Expenses that were not paid using PPP funds can still be written off as usual. And even if your PPP loan was not forgiven, payroll and other business expenses may be written off on your tax return. Can I use my PPP loan to pay business taxes? No, that's a big no. Funds from your PPP loan may only be used to cover payroll costs, utilities, rent or lease payments, or mortgage interests. PPP loan proceeds cannot be used to pay business taxes. Can I defer payroll taxes and receive a PPP loan? Businesses that have received a PPP loan can still defer payroll taxes through the end of 2020 and 2021. Again, will PPP loans be audited by the IRS? Yes. Loans that exceed $2 million will be audited, and the others are subject to audit. So it's always best to be prepared, even if you received a much smaller loan. Now, does your state forgive tax forgiven PPP loans? As you can see, New Mexico is green. So New Mexico does not tax forgiven PPP loans, but please confirm and verify with your CPA to make sure that this information has not changed. It is a moving target sometimes. The next one I want to talk about is the EIDL, the Economic Injury Disaster Loan. So the Economic Injury Disaster Loan is a loan option, and it's available through the Small Business Administration. It's to help businesses struggling with financial hardship due to COVID. And although disaster loans have been available through the Small Business Administration for years, the EIDL was signed into law in March of 2020 as part of the CARES Act, which was passed by Congress to provide emergency relief to American workers and small businesses that were struggling to survive due to the pandemic. If you are a small business, you're a nonprofit organization of any size, or a U.S. agricultural business with 500 or fewer employees that have suffered substantial economic injury as a result of the pandemic, you can apply for the COVID EIDL. These are loans that do not go through a lender. They come directly to the Small Business Administration Disaster Assistance. They're all low interest rate loans, and they are no cost for you to apply. If you're interested in applying for one of these, then you can get a hold of that at the disasterloan.sba.gov, and they have all the applications and all the information and contact information you would need on that website. Now again, The EIDL is a loan, and it's treated the same as any other business loan as far as taxation is concerned. So in other words, funds from the EIDL are not reported as taxable business income on your tax return. So we have the EIDL, but attached to that, and this is the one that this is a really excellent program to get into, and that is the EIDL grant. So some businesses small businesses were impacted by COVID-19 may be eligible for what's called a targeted EIDL advance grant of up to $10,000. And there's also, in addition to that, a supplemental targeted advance of $5,000. These grants do not have to be repaid, and the Small Business Administration is now encouraging all eligible businesses to apply. One of the interesting things about this is that the Small Business Administration did send out a whole series of emails to small businesses asking them to apply for these grants because they have all of this money. And surprisingly, most small businesses didn't apply and haven't applied. And primarily the reason for that is we've all been taught about cybersecurity. So if you got an email from the Small Business Administration and it says, oh, you can get some free money here, you probably chalk that off as somebody trying somebody was trying to get you to hack in and unlawfully get you some money. The SBA does acknowledge that's probably what has happened, and they periodically continue to send out these emails to small businesses. The grant program was part of the initial CARES Act in 2020, but funds were exhausted within weeks. So in December, that's when Congress allocated additional funds for the grants and established more targeted eligibility criteria. So now, to be considered for one of these grants, your business must meet the eligibility requirements and apply. You have to apply first, that's the first step, for an EIDL. However, you do not have to get or accept the loan to get the grant. Important consideration there. So how do you qualify? Well, first of all, you need to be located in what's called a low-income community. And you have to have suffered an economic loss of greater than 30%, and you have to employ not more than 300 employees. In addition, the business must qualify as an eligible entity as defined in the CARE Act. So there's a little bit of ambiguity here, but a small business cooperative, an ESOP tribal concern with fewer than 500 employees. You have to have an individual who operates under as a sole proprietorship with or without employees, or as an independent contractor, you can also qualify. A private nonprofit or small agricultural cooperative can also qualify, but your business must have been in operation by January 31st, 2020. The business must be directly affected by COVID-19. You would be hard pressed to find any business at this point that isn't affected by COVID-19. So what's the definition of economic loss? It's the amount by which the gross receipts of the covered entity declined during an 8-week period between March 2nd, 2020 and December 17th, 2021. It's relative to a comparable 8-week period immediately preceding March 2nd, 2020 or during 2019. So again, with your record keeping and working with your CPA, you would be able to find out whether you qualify through an economic loss definition. But how do you demonstrate an economic loss? By getting your business tax documents organized and up to date. It'll be essential to applying for this grant and demonstrating your qualifications. So what do I mean when I say what is a low income area? Because that is one of the requirements. So the SBA has released an online tool to help borrowers understand if they are in a low income area. And I want you to make sure that you understand that the business address must be located in the low income community in order to qualify. So the Small Business Administration encouraged potential applicants to check the map to see if they meet the low income community eligibility requirement before you apply. Now, I've been out there and looked at it. It's really a relatively easy tool to use. You put in your zip code and it gives you an idea of this. It shows the streets of the area of the zip code, and you can drill down into that to see whether you are considered in a low income area. But it's right down to the zip code and to the street address. So what are these new 5,000 supplemental grants? Remember, the 10,000 was what we started out with, and now we've got 5,000. And according to the American Rescue Plan in March of 2021, they gave $5 billion in funding for supplemental targeted advanced grants of 5,000 to the hardest hit businesses. So what does that mean? How do I qualify? Well, you have to have suffered an economic loss of greater than 50%, and you have to employ not more than 10 employees. So this was very targeted to make sure that the smaller businesses were being taken care of. The supplemental grant is in addition to the $10,000 targeted grant. So let's say you apply for the EIDL, and the Small Business Administration is going to be looking at your documents and your qualifications. And if they feel that you can qualify for the 10,000 as well as the supplemental, they will send out an email and they will tell you that. And I will tell you right now that the people who do qualify for the 10,000, almost 67% also qualify for the additional 5,000. The SBA was going to reach out to business owners who applied for the targeted advance if they appear eligible for the supplemental grant. So getting your business documents, tax documents organized and up to date will be essential again for applying for this grant. Another 5,000 that might be available for you. So as I said, the EIDL grant, initially the funds from the EIDL advances at the very beginning in 2020, they were to be reported as taxable income. Thank goodness in December of 2020, that decision was reversed under the Consolidated Appropriation Act. It does not need to be counted in your taxable income when filing your taxes. Additionally, qualifying expenses can be written off to lower your tax liability. The legislation clarifies that EIDL grants are not taxable at the federal level, that businesses who receive them will not be denied a tax deduction for qualified expenses paid for with these funds, and that EIDL grants will not be deducted from your PPP or loan forgiveness purposes, So they all kind of mesh together, and they all mean that you can have both a PPP and an EIDL, and they don't step on each other. But check with your tax advisor about the tax implications at the state or local level. Well, I know my PPP was going to be audited if I'm over $2 million and is subject to audit for lower amounts. What about the EIDL loans? When you receive your EIDL loan, you agree to spend the funds provided for certain business expenses. And so as part of your loan agreement, you agree to maintain records and provide these records to the SBA to be audited if necessary. While there's a chance you may not be audited, please don't skip this critical step. Maintain your records and be prepared to respond if an audit occurs. Does a grant count as taxable income? In most instances, grant funds are not counted as taxable income on your federal tax return. So again, how do I qualify for a grant, an EIDL grant, particularly a targeted EIDL grant? Well, you have to have previously applied for an EIDL loan. You will receive an invitation by email inviting you to apply for the targeted grant. If you get that invitation, please do so. If you've not yet applied for EIDL, you can do so at the SBA.gov site. And if your business appears eligible, you'll be invited to apply for the targeted advance. You don't need to accept the EIDL loan or even be approved for the loan to get the grant if you qualify. What if I never applied for EIDL? If you have not previously applied for EIDL, you may apply at the SBA.gov site. You would be able to apply for the low interest loan through December 31st, 2021. That's when at current currently, that's when this program will end, as long as funds are available. At this point, there are funds available. If it appears your business also qualifies for the targeted advance or supplemental advance, the SBA will invite you to apply. Can an EIDL loan be forgiven? Nope. EIDL loans must be repaid over 30 years. They're a loan and they need to be repaid. And unlike the PPP loans, there is no forgiveness process for these loans. They're great loans because they're low interest rate, but they do have to be repaid. Can I apply for a Paycheck Protection Program? And yes, Paycheck Protection Program loans may be fully forgiven if they are spent on certain expenses. And note that the PPP loan program is now closed to new applicants. However, if your business received a PPP loan, you may still be eligible for an EIDL loan or a grant. Businesses may apply for both PPP and EIDL if they qualify. But again, note the PPP loan program is now closed. So this is my favorite of all. I mean, this ERTC is like a hidden gem out there. A lot of people don't realize the availability of it, and you're highly, highly encouraged to take advantage of this employee retention tax credit. So what is the employee retention tax credit, also called ERC? It's a tax credit that was first put in place with the CARES Act as a temporary coronavirus relief provision to assist businesses in keeping your employees on payroll. And since then, the ERC has been significantly expanded. And in the most recent relief bill in January, it's been extended for all of 2021. So please be aware that there are different rules between 2020 and 2021. Here's an example. In 2020, you had to have 100 or less qualified full-time equivalent employees. In 2021, they've upped that to 500 or less. The other thing they've done is in 2020, the tax credit was up to 50% of $10,000. And in 2021, you can now get 70% of $10,000 of wages, qualified wages. So now this credit is available for businesses with fewer than 500 employees. It was 100 in 2020, now it's 500. Now, so this is for employees who either were suspended or this is for businesses that were either suspended or partially suspended their business due to employee COVID-19 because of the government order. And this is an or, not an and. So if you were affected or suspended your business due to COVID-19, or you experienced a 50% decline in gross receipts in 2020, or a 20% deduction in 2021, when compared to the same quarter in the previous year, you are qualified and this credit is available to you. Now, there were quite a series of New Mexico government health orders in 2020 and 2021, and each order was affected for different dates. Each order may have affected or may have affected different businesses, but for details on who was impacted and the dates when the orders were effective, you can go to the cv.newmexicohealth.org, and there's a section in there called Public Health Orders and Executive Orders, and it will give you a listing of all of those orders, the dates, and the businesses that were impacted. And you can look at that and determine when you were impacted, if you were impacted, and the dates that you were impacted. The other thing that you need to be aware of, as you know, New Mexico had the red, yellow, green, turquoise coloring that they did by county. So you may have also had different circumstances based upon the county where you're located. So again, look that information up and it will give you an idea whether you qualify. Now, these tax credits are incredibly valuable. They're unlike a deduction, which reduces your taxable income. These tax credits reduce your tax liability on a dollar for dollar basis. The credit is calculated per employee and is 70% in 2021, of up to $10,000 in qualified wages paid per quarter. Qualified wages include the portion of your employee's earnings you pay and reported in the 941, IRS 941 quarterly reporting. So is this credit taxable? Well, yes and no. I mean, the ERC credit is subject to income tax. And the way that it is the wages on the claimed credit must be reduced by the amount of the credit, which results in a kind of backward way in the credit being taxable income. So the reduction in wages may also impact Section 199A eligible wages for purposes of the 20% qualified business income deduction. Again, a lot of CPA talk, and please work with your CPA or your tax authority and tax person in order to kind of work your way through this quagmire. Because of all the, I think of all of the three programs we're going to talk about today, this tax credit has more nuances than the other two programs. So if the credit is claimed on your 2020 payroll taxes after the tax return has been filed, you can amend it. An amendment may be required to accurately exclude the wages that were reduced for the ERC. But the one thing I really want to emphasize is there's no double dipping between the PPP and your ERTC. Both programs are meant to work with wages and help you keep your employees, pay your employees. So therefore you need to make sure that you don't double dip. Let me tell you what I mean by double dip. I'm going to give you an example here. This is a theoretical company, one I dreamt up. It's not real. And it's called Star Technical Support Small Business. And let's say they reside in Roswell. And when they were comparing their quarter two, and I've got that highlighted down below, quarter two of their 2020 tax wages to their quarter two of 2019, or I'm sorry, the gross receipt taxes, they experienced a 55% decrease in gross receipts between those two quarters. Now in 2020, in order to qualify, you have to have a greater than 50% decrease. And indeed, they met that qualification. They had a 55% decrease in gross receipts. This business qualifies for the 2020 ERTC this quarter credit. Now in quarter two, Star also received $12,000 of PPP. Star has 5 employees. Each full-time employee is paid $8,000 per quarter, and that includes their health insurance benefits. And in quarter two of 2020, Star paid their employees $40,000. That's the 5 employees times the $8,000 quarterly wages is equal to the $40,000. So ERTC at 50% of qualified wages, because all of these employees are paid less than $10,000, all of their wages qualify. So 50% times the $40,000 is equal to $20,000 in ERTC. But you need to subtract your PPP that you also had during that same period. But that means you can still qualify for $8,000 in the tax credit. Again, you can't double dip. Now let's give an example of quarter one, for example, of this year. Again, another theoretical company, one I made up. I call them Fred's Fantastic Car Wash, and they're located in Los Lunas. When they compared their quarter one of 2021 to quarter one of 2019, Fred's Fantastic Car Wash had experienced a 25% decrease in their gross receipts. Now, again, remember that in 2021, you can qualify if you have a greater than 20% decrease, which indeed Fred's Fantastic Car Wash met that qualification. Now, Fred has 10 employees, and each employee is paid $7,000 per quarter, and that includes their health insurance benefits. Quarter one of 2021, Star paid their, oops, I have Star, I meant Fred's down there. I'll have to correct that. Fred paid their employees $70,000. That's 10 employees times 7,000, and that equals $70,000. Now, 70% of qualified wages is the 70,000 times the 70%. So they qualify for an ERTC of $49,000. Now, if you annualize that out to an estimated tax credit for 2021, that's $196,000 that is a benefit to this small company. Something you don't want to ignore. So here's a comparison between the 2 years to show you how much more beneficial it is between 2020 and 2021 and how they've improved this program. Used to be 100 employees in 2020, now it's 500. Used to have a gross receipt decrease, you had to prove 50% decrease, now you only have to prove 20%. The wage cap has remained the same. You can own anything over 10,000 does not qualify for this per employee per quarter. Your wage credit for each employee, it used to be 50%. Now you can claim 70%. So you can see just by looking at the difference between the 2 years that the 2021 is really an advantageous program and is improved through between the two acts through Congress. So how do I file? Now, if your business was not in existence in 2019, you can still use the average quarterly wages that were paid in 2020. Exclusions, you cannot use the owner's pay or the owner's relative's pay when calculating wages. And this is still under discussion as far as the owner's pay, and there's a lot of interpretation going on here. So again, work with your CPA or your payroll authority to make sure that, that you're up to date on the current interpretations on this. You file, you apply for this credit using your standard quarterly form, your 941. If you want to file in advance through estimates, you can use Form 7200, advance payment of employee credit due to COVID. And if you haven't taken advantage of the ERTC in either 2020 or 2021, you can file retroactively using the Form 941-X. That's your adjusted employer's quarterly tax return. So you can take advantage if you feel you've missed out in 2021, and you can take advantage of filing an estimate early through the 7200 advance payment of employee credit due. So how long do I have to file? Ladder of 3 years after the original filing or 2 years from paying the tax. Again, there are a lot of nuances in filing for the ERTC. So please, please get advice and help from your payroll expert, and preferably a professional who is well informed on current interpretation and laws. They're changing constantly, and you need someone who's keeping up with those changes. So while the ERC is certainly a tax-friendly relief provision, the IRS is not just giving dollars away. They're looking at every taxpayer submission, both on the front end and then auditing down the road. So please be aware of that. The best practice is for business to provide contemporaneous documentation now when first determining whether they qualify. So in order to avoid headaches and heartaches down the road, businesses need to have counsel to properly and fully document and paper how the business qualifies for the ERC. Business owners need to be aware as to whether their company qualifies for the ERC, and please don't miss out on this terrific tax incentive. Here's a question. I can't claim ERC if I've already claimed PPP or gotten my PPP loans forgiven. Now you can claim both. In the Consolidated Appropriations Act of 2021, they removed the limitation on only claiming one or the other. PPP will account for 2.5 times your monthly payroll expenses and is meant to be spread over 6 months. This leaves plenty of uncovered wages expenses for claiming ERC. My business did not have a drop in gross receipts of 50% or more, or 20% or more, depending upon which year you're filing for. The CAA has changed the qualifications so that a reduction of 20% now qualifies. But remember, there is always another way to qualify. It's not just your change in gross receipts. It's if you can prove that your business has been subjected to a partial or full suspension due to a government order, and you can qualify for ERTC. My business was not shut down during the pandemic. Even a partial suspension order by the government, federal, state, or local, of your business could potentially qualify. A partial shutdown, a disruption in your business, your inability to access equipment, having limited capacity, shutdowns of your supply chain or your vendors, reduction in services offered, reduction of hours to accommodate sanitation, shutdown of some locations and not others, and shutdowns of some members of a business are all scenarios that still potentially qualify you for the ERC. The key considerations are that due to the government-ordered partial or full suspension was that your business was not able to continue its activities in a comparable manner to 2019, and did that result in a more than nominal impact on business operations. Remember that the partial or full suspension is an alternative way to qualify for the ERC, and it's separate from the reduction in gross receipts test. My company was deemed an essential business, so I do not qualify because of business suspension. Even if your business is deemed essential, an impact or change in your business may still qualify you. For example, even if you were open, but your vendors were closed down, or you couldn't go to a client's job site, you may still qualify. Or alternatively, if part of your business was considered non-essential and was impacted by a government-ordered suspension, you may also qualify. My company has grown during quarantine. This isn't something I should take. Great news. If your company has grown during quarantine, but experienced a full or partial suspension, there are expenses that still may qualify. Sales have rebounded for us in Q1 of 2021. I can't qualify for this credit. With the introduction of the CAA, you have the option to look at 1 quarter prior to determine qualification. This means you can determine eligibility based on lost revenue in 2020. Also, if you were subject to a full or partial suspension, you may qualify regardless. We were in losses or do not have any tax liability. Well, remember, this is a refundable credit, and in practice, this means that any credit overage above tax liability is sent to the taxpayer or the business owner as a refund. My company has grown to over 500 employees, so we are not eligible for ERC. The employee count restriction is based on full-time equivalent employees, which is a more involved calculation than just counting how many people you have in your office. If you paid any employees to not work or to work less than the hours for which they were paid, then the employee count restriction would not apply for those employees. So again, work with your payroll expert in order to be sure you define full-time equivalent, and you may still qualify. I'm a charity, and the ERC is only for businesses. Well, the ERC also may provide significant benefit to charities, churches, nonprofit hospitals, museums. Charities can be particularly good candidates for the ERC. Failure to document the tax man cometh. ERC is a refundable tax credit, and it provides robust benefits. If you had to draw up a tax provision that makes the IRS lie awake at night, it would be this refundable tax credit involving real dollars. But again, there are a lot of nuances in filing for this credit. Make sure you work with a payroll professional. Make sure you get the full credit that you are eligible for. So let's do a bit of a recap. What's the process? Well, Congress votes, enacts laws, and provides government funding. The IRS, or the Small Business Administration, state and local governments, they interpret the law and the tax implications. New forms can be created and reporting requirements may be added. The CPAs follow the interpretation as well as your payroll authorities, and they provide guidance to the taxpayers. So what's the result? Well, still a lot of confusion out there, guys. And they're still constantly restating and clarifying and restating and clarifying. So that's why you need somebody on your side who is up to date on a lot of these discussions and understandings and interpretation. That's part of the reason that the 2020 tax filing was moved out to May 17th. It's because there was a second round of PPP. There were changes to the employee retention credit. There was continued stay-at-home orders, making it difficult to access taxpayer data. And the IRS is short on staff due to the COVID-19 pandemic. All were reasons that the tax filing was moved out. And there's still some of that churn going on. Your 2020 and your 2021 taxes are likely going to look a little bit different than they normally do. This means you're going to probably be dealing with situations you've never seen before, including forgiven loans, grants, and unemployment benefits. Record keeping needs to be accurate and up-to-date set of books, such as your balance sheet and your income statement. You need to track and categorize all of your business expenses on both balance sheet and P&L. Receipts and invoices should be digitally filed and recorded, and take the time, because it's well worth the effort to be able to see where your money is going and ensure you'll be able to get the most of your eligible deductions come tax season. Again, please keep in mind this information is changing rapidly and is based on current understanding of the programs. It can and likely will change. Although we will be monitoring and updating as new information becomes available, please do not rely solely on this presentation for your financial decisions. We encourage you to consult your lawyers, your CPAs, your payroll experts, and your financial advisors. And who make sure that whomever you consult with, they are up to date on the most recent guidance from the Small Business Administration, the IRS, or the US Treasury. Okay, Leslie, we're going into the Q&A section, and I don't know if we have any questions.
Yes, we do, Peggy, and I'm going to read them to you. You may have covered them, but the first one that came in, when you say that PPP loans are not taxable, assuming such are forgiven, is this for IRS purposes only or state taxes too?
The state taxes in New Mexico, it also is, they don't tax it. So it's both federal and New Mexico state. But again, clarify that with your CPA. But that's currently what's out there, that's current guidance right now.
Thank you, Peggy. Here's another question. Are EIDL advance monies gone? I wanted to apply for the EIDL advance, targeted or supplemental last week, but SBA's website stated that the advance monies were gone, so I didn't apply.
My understanding was they still had some advance that was out there. So I'm kind of surprised that you got that message back, because when I look, there's a tracking where you can track online to see how much of this advance is still left. You can see there's a lot of dollars that are left on that. So I'm a little surprised. I would go back and recheck that and question that, because you may have gotten incorrect information. Somebody may not have understood what you were asking. I'd go back, I'd push up against that decision.
Thank you. Last question that we have. I'm confused by example, and we may need to find, questions are still coming in. I'm confused by example number 1, QT2 2020 with the ERTC Employee Retention Tax Credit application with PPP. By my calculations, it should be $40,000 wages minus $12,000 PPP wages equal 28,000 times 50% credit equals 14,000 ERTC. How did you get only 8,000? Do we have to apply the credit percent prior to deducting the PPP?
All right, so the way that I did this is they have 5 employees and they're paid $8,000 per quarter. So that's your 40,000. Your ERTC, you'd have to take 50% of that. So you are qualified for $20,000. But because they got a PPP in addition, you have to subtract that because you can't double dip. And that's how I came up with the $8,000.
Thank you.
Okay.
We have another question. I started my business in December 2019, and just as I was getting set up so I could go out and sell my products at certain venues, we went into shutdowns. Are there any of these available to me?
Yes, and I believe there are, and definitely the ERTC. I would check with your payroll, the people who do your payroll or your CPA, and they would be able to tell you if you can qualify. Not knowing the specifics on your business or the circumstances, I would definitely check with them because there's a good chance you will qualify.
Thank you.
Okay.
That is all the questions. We'll give it just just a few seconds. If anyone has a last question they want to type into the Q&A, go ahead and do it now. We want to remind everyone to visit nmsbdc.org for upcoming webinars that we have available, and to also sign up for a no-cost confidential counseling that is available. What's next, Peggy?
Well, what's next is hopefully you guys got some information from this presentation and this webinar that will give you in your toolbox a series of questions that you can ask, so you have a better feeling of, what's out there, what do I qualify for, and ask the questions. That was the purpose of this, to give you a better understanding of what's available, what are the qualifications, and take advantage, particularly of the tax credit. It's a wonderful program. So it's up to you. Go forth and hopefully get some good money and particularly if you can file in advance for your for that tax credit for 2021, or if you've missed even part of 2020, it'll give you some good money for your businesses.
We do have the last question that came in. I'm going to give it to you before we wrap up. We're running out of time. We had put an hour and a half, but the session is only for an hour. This is the question that came in. I want to update my website to get more customers. I have PPP loans. Is this a qualified expense?
It very well could be, but again, I would go to your CPA and confirm that. They will have, there's been a lot of clarification. There's been a lot of expansion and understanding in the last few months on PPP as to what qualifies. And they would be able to tell you whether that does qualify or not. I would certainly ask them.
Thank you, Peggy McDonough, for the valuable information that you've imparted to us today. We're lucky enough to have her for a couple more webinars. So again, check our website for the upcoming schedule. I want to tell everyone to have a great rest of your weekend, so on, and visit us next time. Peggy, thank you.
Thank you, and thanks to everyone who participated. Really appreciate it.
And we have thank you for your hard work in putting this webinar together for us. Have a wonderful weekend. Bye, everybody.
Bye.